Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. Y'all know that drill. Hit that like button, subscribe if you already haven't. And I just want to do a quick video today over the recent market action. And part of this channel isn't just, me giving opinions or giving polls, but it's also a teaching mechanism because, as I said, very few people know the fundamentals of gold, if any. And, trust me, I've been in, gold sales and I've been in, I used to do YouTube with other channels and very few, if any, know. So you'll hear stuff talking about gold demand from China, silver miners and gold miner cost. There's so many bad things, but today's trading action shows you the actual fundamental driver of gold and right now this market. And I was just saying, if you look at how the gold market traded today, you'll see exactly what I'm saying. Job numbers today were not abysmal, but they were horrid. They were not good. They're well below expectations and really were a big letdown after the ADP report on Thursday. And you can see ADP report, very good news on the labor market. It was over 400,000 jobs, ADP's private sector. But today the BLS, Bureau of Labor Statistics, big miss, only 205 or 210,000 jobs. It was supposed to be well above that. And what happened was the stock market finished in the red today. And the gold market, despite, the Fed hiking rates and everything, finished in the green. And this is what I was telling you. One of the reasons the stock market and all these things were doing so well last decade, it wasn't just easy money. You had a good economy on paper. If the jobs numbers were a hit, who knows what would happen. Now, ADP, did do a sell-off. Now, we might be in a market where all news is bad news. Now, that wouldn't be good for the stock market, but we could be like that. And that's going to be really bad news because during the ADP report, the jobs numbers really sold off. And they said it was because the Fed was hiking rates. But today, a softer jobs report, this was also bad news. But gold, unlike the ADP report on Thursday, where it was only down 4, this was up. It finished the close of the day around $13. So all bad news on the economic front will be good for gold. And that's what I've been saying. Like, I've done videos here earlier saying jobs numbers will propel for gold. And I was looking at a chart of just the labor employment. And if you really look at it, it really almost tracks gold price since 2009. It's unreal. The unemployment rate from 2009 to 2011 starts going up, hits a peak in 2011. That was the top of the gold market. Then it started going down, and that was the beginning of the bear market in gold. But then from 2019 to 2020 goes up to 5.5%. Well, what happened? Gold from 2019 on went from 1,100 to making new all-time highs. And so if you look at it, the bad economic data, and that's what's really, despite real rates rising, despite everything else, what's really had gold hold up this year, and if you go back from the 1,600 lows in 2022, is really the deteriorating economic data. And that's why it's still up from those fall lows of around 1,600. It's now around 1921, 22. So that's a $300 gain. And I think we're going to have, it could go sideways for a while, but as this economic data deteriorates, it's going to be bullish for gold, even if gold goes sideways during it, because eventually the Fed's going to have to reverse course. And once these economic data starts falling, it's going to take a year or 2 years. And that's why I think gold's going to be in a bull market over the next couple of years. It'll take a couple of years. Now, some people are saying all those recession callers, they're too late. Sorry, you can't just keep calling for recessions. The reality is in 2022, we had a mini recession. It was brief, but we had one, but then they changed the definition, which I think is going to backfire, because I don't think this is going to happen right away. And I don't think the jobs numbers, I'm not saying the next job numbers will continually getting worse. The next report next month might actually be good, but the job numbers are generally the last to fall. And that's where I really think, with a horrendous labor department, they might just call a recession and there's nothing they can do out of it. So looking at all this, just take the lesson today. The bad job numbers are what will propel gold into a new bull market. Gold was not doing well. Everyone was talking about it's going to break 1900 down to 1850. But what happened? We had bad job numbers and it's bounced up. It's not breaking below 1900 or to 1850. The bad job numbers has it up to around 1921, I believe. I don't know the exact number off the top of my head. So we're really looking at, and another reason this horrid economic data is going to continue is student loans. You have to remember, consumer spending numbers are going to fall off a cliff, because this student loans was a break for millennial, Gen Z, even parts of Gen X to spend more money on other things. But now they have to start paying back those loans. And they'll go from the last thing they paid to the first thing, because you know why? You can't discharge these loans into bankruptcy. You go bankrupt, then they garnish your wage for I don't know how long. And so this is really going to be bad. And a lot of Americans are up to their eyeballs in debt. So what are they going to do? They're not going to discharge into bankruptcy. They're going to either stop spending, they're going to stop going out. Maybe they'll trade down. Maybe they'll trade down to grocery stores like Lidl and Aldi. Maybe they'll start going to Dollar Generals. They'll probably stop going to happy hours, or if they dine out once a week on the weekends, they'll stop dining out. And so that's what's gonna happen. They're gonna stop. They're gonna start cutting back on a lot of things. So, and that's gonna hurt consumer spending. And not only that, if they had a hard time making credit card payments, if they haven't already done that, this could lead to bankruptcy. Because think of it, if you have a lot of student loans and you have a lot of credit card debt and you can't pay either or, well, you can't discharge your loan into bankruptcy, but you can discharge your credit card debt into bankruptcy. So, other credit problems could start emerging from this. So this student loan thing is also going to cause the economic data to start deteriorating, and people are going to travel less. If you have to make student loan payments of $500 a month, you can't travel anymore. You can't go away for the weekend or go away for the day, or among others. So there's a lot of people who are going to really, this is going to cut back on economic activity, and the economic data is going to get worse. So good for gold, bad for everyone else. So anyway, that's all I had to say today, is the student loans, and look at the gold price. If you're interested in the gold price, follow the economic data. They are covertly. You got to follow a lot of things like interest rates, Fed policy, and everything, but the economic data is the most important. So anyway, if you like this video, hit that like button, subscribe if you already haven't, and I will see you next video.